All right, guys, back to work. Boy, fantastic job today. Things got a bit interesting this morning with that big bull trap off the high. But I'll tell you though, as the dust settles here this afternoon, there is one specific type of chart pattern. My favorite type of chart pattern is setting up right now on the S&P SPY, on the Nasdaq triple Qs. This one chart pattern gives us plenty of ways to make money tomorrow morning. I'm going to cover the entire game plan in tonight's video. I'm going to make sure everyone has a roadmap to make some money as well tomorrow morning. So charts are all ready to go. Enough of the intro. Let's get started. Go make some more money on Wednesday morning. Nasdaq triple Qs are all ready. Oh, the E-mini and the SPY is ready. I have two very important clues on the charts right now that are telling me where the winning trades are waiting for tomorrow. One of those big clues is right here on this 60-minute, the hourly time frames. We're definitely bullish overall. I know headlines are pretty scary this morning with things escalating in the Middle East, but it will take a little bit more than one big leg down. They've got to get another big leg going lower here before we start calling this a bear market. So one of the most important clues right now is we're still a bullish overall market here on the higher time frame. But I have one more important clue on some faster time frames that will help us take this overall bullish bias direction and time the best entries, because these hourly charts are not very good for timing entries. Before we talk entries though, let's check our schedule for tomorrow. There's no major news for tomorrow. Tomorrow might be the eye of the storm, which might not be the right term to use considering what happened the southeast portion of the country this week. So hope everyone is safe and drying out, and my heart goes out to everyone be affected by that hurricane right now. But we had, of course, Jerome Powell yesterday, right? And of course, we got the big employment number coming on Friday. So no major news tomorrow. We will obviously be keeping track of the port workers strike on the East Coast right now, the recovery, of course, the hurricane. And of course, we'll see if there's any more escalation overnight tomorrow. That's a big wild card for us tomorrow with the tensions building in the Middle East right now. So no major news. We get a lot of stuff though, a lot of pokers in the fire right now we're keeping track of tomorrow in our trade room. But let's get back to our charts though, because the money is made on the charts. The entry patterns are found on the charts. Speaking of entry patterns, I mentioned earlier that we got this big bullish bias overall right now on the hourly chart, but we're not going to trade an hourly chart tomorrow morning in our trade room. We trade tick charts. Tick charts are based on volume, and tick charts make pattern recognition a hell of a lot easier. All the time frames tonight, by the way, upper left-hand corner, the 7,000 tick chart. And if you're watching for the first time right now, this yellow line right there is the 21 EMA. It's pretty much the only indicator we use to find winning trades each week. I told you earlier there was one of my favorite chart patterns is setting up right now, and this is it right here. We have a bear market into a trading range. Now, ranges, you probably know this by now because we see a lot of ranges in these markets right now. Ranges act like magnets, and they love to rotate back and forth, right? We call these pendulum swings. And we'll use things like expanding triangles. We'll measure the amount above and the amount below. That was what tipped me off. If you recall last night, that was what tipped us off for that bull trap off the high last night. Now, why is this so special? You know, good question, right? Why is this range so special? Because think about this. We have a bullish overall bias on the higher time frame and a bear range, bull overall bias and bear range. What this does is this sets up for one of my favorite entry setups. I call a slingshot reversal. If we understand that ranges like to rotate back and forth here, oftentimes we'll get this move lower and we'll bear trap down here and slingshot off of that low. We're overall bullish, right? So we have to assume there's a lot of buyers down there and some great spots for a bear trap. I'd like to get one of those failure into trap combinations. Here's how I'll look to time the entry for tomorrow. I'm not going to pick a bottom down here, right? As confident as I am in that pendulum swing, I'm going to wait for a move lower. And then what I'll do is I'm not going to pick a bottom. I'm going to use that failure pattern we teach in the free video course. Let the rookies chase it lower once, twice. Now why twice? Because now I get you trapped. Now I can use your stops to fuel that reversal going higher, right? Think about this. If you're caught short and you get stopped out, you got to buy your way out. It fuels that move going higher. This is a failure pattern, a 2-try failure, like I teach in the free video course. Now, the market wants to rotate, right? It wants to rotate back to the other side of that trading range. Now, watch closely. The easiest way to make more money is to add to your winners. Adding to your winners, one of my favorite patterns to add to winning trades off the low of that range is a straight up bear trap pattern. Now, bear traps. First things first, I want to see separation off the moving average, shallow pullback, higher high in price, and a trap right below that low. Remember, leave that runner because it'll want to rotate all the way back other side and potentially break out all the way back into that big range up overhead. So one of my favorite trades, kind of a sequence of trades in this bear range in an overall bull market, is a failure pattern into trap combination. Now, what if I'm wrong? What if I'm wrong? You know, as the dust settled this afternoon, it seems like the attack on Israel is coming to an end. The markets may recover from this, right? There wasn't a lot of casualties. The defense, the Iron Dome seemed to have worked pretty well. If things don't escalate, we may not get that full rotation, right? This may wind up running. You know, markets love to forget about what happened if nothing new comes out. So if that happens here, there are 2 more trades I'm watching for tomorrow. One, if we begin to escalate going higher here, what I look for is a shallow pullback that separates off the moving average. Very important. Remember, separation equals strength. A higher high in price, and I want an entry right below that low. This is a classic bear trap pattern like I teach in the free video course. It's just like that one off the low I mentioned earlier, higher high, trap off that low. Okay, now, very important. Anytime we have a range breakout, the breakout leg is the measuring leg. Okay, why is it important? Because if you want to make more money, don't trade more often, get better at holding on to your winners. That will tell you now where to take some profit. You'll notice I got a measured move kind of pending up there I'm watching for tomorrow. Now, once we get back up there, once we get that measured move completed, we stop buying, and now think of it this way. This range is now begging for a breakout pullback. One of my favorite trades after a big breakout like that, and again, we'll see what happens for tomorrow, right? But this game plan is ready for us if we need it. If we get that big run going higher now what I'll do is look for a 2-legged pullback. Now, what's a 2-legged pullback? It's just like it sounds. It's 1 leg below the moving average, and a second leg lower will usually go a bit more than a measured move, right? A bit more than that 100% extension. Now, obviously, I can't predict the future, but this is the technique I'll be using tomorrow. Ideally, it'll be somewhere off what was resistance will become support off the top of that range, right? Basically, a breakout pullback off of that trading range. Now, let's face it, right? This may go all the way back into that range again because ranges act like magnets, and I will talk about how to short that here in a moment. What I'd like to do though is, with all of that bullish momentum going higher here, there's a good chance these buyers are going to want to go back up and take out that high. Don't pick the bottom on this. As the market pulls back, wait for the rookie bears to come in and chase it once, twice, trap those bears in and light those stops up. This is that same failure into, again, separation off the moving average, higher high in price, and that bear trap running below that low. Once you learn this sequence, that failure in a trap combination, you will see why I love using it so much in our trade room. So a follow-up trade here is if we can get this thing reversing off that low, if the market kind of gets over this for tomorrow, we use that bear trap pattern, right? That higher high, that trap below that low. We know where the measured move is. We look for that 2-legged pullback. And again, it's that failure in a trap combination, the target going back up to retest the high. I'm getting kind of excited just talking about this stuff right now, looking forward to tomorrow. But first though, let's slow down for a second though, because I know that most of you guys and gals watching right now, you know these patterns, you're making money with these already. But if you're watching for the first time right now, this might be a brand new language, a brand new strategy you want to learn. So don't you worry. I teach this entire strategy. I have hundreds of examples of failures and trap combinations, two-legged pullbacks. I cover this in so much more detail and a lot more examples inside our free video course. What I'll do is I'll put a link up top here for you, upper right-hand corner, grab that link that popped up and take that free trading course, because the strategy I teach will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries and make more money. Guys, the markets are way too good right now not to be making consistent profits. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, hit that link that popped up there, take that free video course. Everyone loves the free video course. I get so much positive feedback about it. It is perfect for anyone who's serious about making money in these markets. And also keep in mind too, I'm going to put all the important links I talk about tonight will all be in the description of the YouTube video. Start first with the free video course, learn the roadmap, learn the setups. Everyone loves the free video classes. Then come join us in our trade room every morning, 8 o'clock Eastern time. I'll put all the details again in the description of the YouTube video. And keep in mind too, I post a lot of charts and videos, mindset stuff throughout the day on Twitter or X. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more and earn more are linked in the description of this YouTube video. So there's a good spot to learn more. But now you know more about how I want to buy that slingshot reversal off the low. And if I'm wrong, if it runs without me here, how to make some profit, to find some entries going higher here. Now I want to talk about some variations, because I gave you guys my favorite trades here for tomorrow. But you know these markets, they love to throw curveballs. They're very rarely perfect. So let's go to the Nasdaq right now. Very similar, of course, to the S&P. The Nasdaq here, let's talk about some variations now on the Nasdaq in case we get some, kind of messy markets tomorrow morning. Now, before we talk Nasdaq, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies. That small action for you takes barely any time, but it makes a big impact on this YouTube channel because it rewards me every time you like, share, and subscribe. I know we're all busy people these days. I greatly appreciate you carving out some time with me every evening to watch these videos. So thank you so much for the likes, the shares, subscribes. Now let's talk some Nasdaq here. You'll notice the Nasdaq, of course, very obvious, right? We're very bullish overall. Like I mentioned earlier, it takes a lot more than one big leg down to abandon this overall bullish market. We always talk about this in the trade room. We say, give the benefit of the doubt to the overall trend that we're seeing right now. So, we have to get another leg lower here to really hold lower before we start calling this a bear market. So right now, we're definitely bullish overall on the hourly time frame. But again, we're not going to use that to time entries tomorrow morning. Once again, 4,000 tick chart, you'll notice there in the upper left-hand corner. And one of my favorite chart patterns, it's a bear range. And again, the range isn't what makes this special. It's the contrast between the bear range and the overall bullishness, right? So bear range, we rotate below the range, above the range, above the range, below the range. Think about where that triangle is here. And again, markets love to rotate back and forth. I mentioned earlier that I love the idea of running lower, right, and running higher. I mentioned that earlier. I also talked about earlier that breakout, right, and that pullback on the S&P as well. So that game plan is very much still in play here on the Nasdaq. But let's talk about some variations now, right? Just in case we don't get the ideal setups for tomorrow. For example, we may wind up running higher, but the underbelly of that range is right there, and it may get whacked right back down again. I have no crystal ball for tomorrow. I just know where the best setups are going to be based on these scenarios. If we run higher and get whacked back down off that high, we know what's going on, right? We know the market's trying to rotate back and forth inside this range. The entry pattern I'm looking for, though, if we go higher and then get whacked back down again, I want you to think about that V-top reversal we always talk about on this channel. Now, V-top reversal, they're a bit difficult on our discipline, our patience, because if we run up and run back down again, if you're anything like me, you're going to want to chase after this. Do not chase after a V-top reversal. What you do is draw a trend line off the lows, bring that trend line up around that high. That creates a channel. Then look left, find some prior swings. And as always, the first test is the best test. Now, I'm going to keep it simple here right now because keep the video short, but this could be any of the entry patterns I teach in the free video course, right? Could be a bull trap. Let me show you here. Oftentimes what'll happen is we'll get underneath or above the moving average. The buyers will come in, try to buy this thing. We can use that failure into pullback combination. Again, there are a lot of examples of this inside the free video course. So bull trap, failure, pullback combo, as long as it's the first test of the high of that channel, right? Makes sense, right? So draw that trend line down, pin off that high, and find the entry set up off the high of that channel. Now, this same V top pattern can easily be applied down bottom as well, right? So for example, I mentioned earlier, if we go lower, I would love to trap the bears in once, twice, right? And squeeze those bears back up again. That's a fantastic trade, but we may not get it. You know, there may be so many buyers. Again, this is it's a relatively common pattern, right? The bear range into a bull, overall bull market. I'm sure I'm not the only person who loves this pattern. So there might be so many buyers down here. And of course, all the bears who get short up here, they may take all their profit down here knowing that it's an overall bull market. And we may not get that. It may just boing and rip right back up into that trading range. That would not surprise me at all because the overall trend we see on the 60. When that happens though, that V bottom like this, don't chase after it because, well, your patience, we reward as traders, we get paid to wait, right? We get paid to wait. So as it begins grinding higher, I don't care what it takes. Be patient though. Wait for that new channel. Draw off the highs first, bring it down off that low, then look left. The goal is I want to find one of these prior swing lows that lines up with the low of that channel. I want that first test. Right? I want that first test. And ideally, the best ones are below a prior swing. They won't always be below a prior swing, but those are my favorite. One's below a prior swing because that's where traps live. And again, this may be below the moving average. That's where failure patterns live. Again, this will make a lot more sense once you guys digging through that free video course. And remember too, the amount below the range, the amount above the range, that will tell us where that target will be on the opposite side. One other variation of this too is that oftentimes we'll get that big run down, we'll get that pop back up, but then for whatever reason, right, the whole underbelly of that range, it'll roll over and do it again. Remember, we're an overall bull market, right? We're not a bear market. So these retests of these lows, these double bottoms, what happens a lot of times is we'll get these big runs down, we'll pull back, we'll retest that low, and then see what happens here? It pulls back, 1, 2, and squeeze back up again. These I call them double bottom retests, right? Double bottom overall bull market. Remember, they have not retested that low yet. So if they roll this thing down here, right, punch it lower, again, I like the idea of buying off that low. If we get that, oftentimes we'll get that 1, 2, we'll get that pop back up. But because that momentum is so strong like that, right, sometimes we'll hold the underbelly of that range, run back to retest the low. Once they take out that low, the way I think of it is anybody who sells short right there, they become buyers at that low. Sellers up here become buyers down here because sellers, when they take their profit, right, they buy their way out. Is this a good place to sell short right there? No, right? Of course it's not. It's a support below a trading range magnet, overall bull market. Of course, it's a horrible spot to be a seller. But you know what? When I was a rookie, I didn't even look into this stuff. I was chasing after entry patterns left and right. I'm embarrassed how bad of a trader I was the first few years of my career. And there are lots of rookies out there they make the same mistakes that we all made before we knew better. So same thing. Think about trapping those bears in once, twice. Remember, I don't have a crystal ball. Stop all the picking tops and bottoms. You don't need to get the whole entire move. You can make a killing by only getting a little slice of that move. I would rather trade some consistency for the profit per trade. I think everybody would, right? Anyways, so 1 try, 2 try, right? Squeeze those bears up. And again, it's always going to be that failure into that separation off the moving average, higher high, and that trap below that low. That's better to draw it like that. Trap below that, that low like that. And again, it wants to rotate, right? So leave that runner going higher. Double bottom retest are oftentimes the most lucrative trades we find in our trade room. And then you know what? What if things do escalate tomorrow, right? What if things do escalate, the rhetoric kicks up and things are on edge again? If I'm wrong about that slingshot reversal, if we really pound lower overnight, if we really pound lower tomorrow morning, this range is a huge clue. Because if this thing really rips going lower, anytime you see a range breakout, the very next thing you should look for is a breakout pullback, right? A breakout pullback off of that range. If there's one thing you learn from me, please, it should be breakout pullbacks, because I've been watching charts for a very long time, and breakout pullbacks are one of the most consistent things I know about technical analysis. I mentioned earlier, right, that breakout pullback off the high, right? Simple there. Same thing here, right? If we get that run going lower, now ultimately what is support now will become resistance before, right? Or tomorrow, you know what I mean? So if we wind up, if this thing just dumps, right, and blows right through the pendulum swing, right through that triangle, if the bottom gets pulled up, the rug gets pulled on it, and it dumps going lower, now, remember, whenever I say breakout pullback, I want you to think about a 2-legged pullback. A 2-legged pullback's easy, right? It's above the moving average, 1 leg. Second leg, again, think about a measured move that goes a bit too far, right? Ideally, I want to get that measured move, goes a bit too far. I want to get that right around kind of the underbelly, if you will, right, of that trading range. Now remember, this may keep going, right? It may keep going. And if it does keep going, what do we do? Well, if it does keep going, it'll probably begin to grind going higher, and you'll know what to do then. You'll find that high, find that low, and grab that first test, right? You know how to trade that if it begins to grind and going higher. That'd be pretty wild, obviously, but that's the game plan, right? Once you know how those V bottoms work like that, you can now kind of use them in different scenarios. On this one, though, what I'll do is, again, we're not going to pick a top on this because it might keep going higher. If I can get that 2-legged pullback, it's trap those bulls in once, twice, lower, remember, lower low, right? Lower low. Trap the bulls in once, twice, lower low. Why lower low? Because buyers want to buy low. I need to trap those buyers in as it goes lower. They keep adding the positions. Then I know where stops are, and I can light those stops up, sell into those stops for that run back down to retest that low. Now, this is exactly where a double bottom retest comes in, right? 1, 2, trap them in, higher high. Why? Because sellers want to sell high, squeeze them back and forth. I'm always telling my students, think about where is a horrible place to be a seller and look for bear traps there. Think about where a horrible place to be a buyer is and look for bull traps there, right? Now, obviously that comes with experience, and we'll do more of this tomorrow morning, but that's the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time. Come trade this stuff with us, guys. The easiest way to start making money in these markets is to learn and trade along every morning in our trade room. Once again, I'm going to put all the important links tonight, the description of the YouTube video. Start first with the free video course. Everyone loves the free video classes. Lots of trade examples in there I'm sure you'll love as well. Hope you learned a bunch here tonight. Hope you use this knowledge to earn a bunch tomorrow. Hope everyone is safe after the hurricane, and hopefully things will keep improving here this week. And of course, and hopefully I'll see you sometime soon trading with us in the morning trade room at 8 o'clock Eastern time. In the meantime, my name is Joseph. Be well, be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.